why did this pattern work? MACD below the pivot, the 15 correlated, right? The 5 go negative. This is a buy divergence against the 15. So when you get an oversold condition and the algorithm goes negative and the 15 just flipped positive with the MACD is below and the algorithm, you could buy here, you could buy here, you could buy low here, maybe 3 entries, and then it shot up. But with oil, you have to go wide. You may have to go every 5 or every 8 cents on oil. Yeah, you cannot go every 2 on oil. Oil is insane. Now, if you had bought oil, let's say you bought oil here at 05, it goes to 20. You can raise your stop or kick it out. It trades down again. Let's say you bought 05s again. Now it trades down to 90. Not bad. 50. Listen, this is trading. You have to build a position, right? So now you buy 95s. Your average price is even. Now it's 10 cents against you. Okay? And then it shoots up to 11. Now you can sell it, and then the next one pushes down to 83, but still intact. So you could have bought this 2 or 3 times and traded it. Now on the third one, look what it did. It just ran 60 cents. Okay, so this is a phenomenal buy divergence. Why is it a buy divergence? MACDs are positive from below. The algorithm turned positive. The 5-minute time frame went negative. You got oversold. Okay, and look what you did. You had 3 great buying opportunities. This is a buy divergence. Okay, so I'm talking to Vasco like I'm talking to all of you. S&Ps were a great short. Dropped 6 on that. Okay, that was a great sell divergence. Okay, why is it a sell divergence? Where's Crazy Vasco over here? Why is it a sell divergence? What do we do? Left to right, top to bottom. MACD above the pivot, MACD above the pivot. You made new highs. The algorithm went positive. You short the new high on the overbought reading. That is a sell divergence. Monster sell divergence. Okay, monster sell divergence. Okay, so when you had the MACDs above the pivot on both the 15 and the 5, and you're making new highs and you get overbought, okay, you look to short that. That's a great job. I think, good job. A lot of people, good job, short notes. Good job. I love it. I love it. I love it. I love it when everybody gets the real understanding, beautiful, of really understanding how to trade the strategies. All right, if you want to take a little bit of a scalp long here, S&Ps, you could take a scalp long, go 20 to 28 on the S&P. You're going to get one more push up to a lower high, but I mean, we'll see. Now, I want to short the opening here. All right. Microsoft needs to be short on the opening. AMD needs to be short on the opening. Micron needs to be short on the opening. Apple, NVIDIA. Oh my God, NVIDIA. Wow. Goldman. Let me see here. Let me just do this right. Okay. Oh my God, Procter & Gamble got kabooshed. Look at this thing. Okay. All right. So we're going to look to short here. We're going to look to short despite, okay, all 4 ETFs, hands down, okay. AMD, AMD and Micron, okay, NVIDIA, Apple, what else here? Microsoft, I think, is a screaming short above the 229. What else here? Boeing, 166 level, probably is going to be a short. Okay, so we have the 4 ETFs, right? We have the 4 ETFs. Diamond Spiders choose Russell. Gold, nothing. Apple, I would look to short. NVIDIA, I would look to short above the 448.20. Up to Netflix, AMD, Micron, and Microsoft. Roku, nothing. Square, I would short the Square 63.60 to 64.60. S&Ps, if you bought them at 28, just look to sell 29 to 31 range, okay? All right. And again, this can all change in the next, you know, couple of minutes here. So, all right.
So
if you're going to trade the S&P futures, you see how I have my room? I have the S&P futures right here, the 3-minute time frame right there. In my book, the 3-minute time frame is the most powerful time frame, in my opinion. Okay. Second, sorry. Second, the underlying ETF, the spiders, regular session, 9:30 to 4, not pre-market or post-market data. And then you have the SDSs underneath. The SDSs will give me things or strategies that would just confirm everything else. That just makes me feel 100% more confident. Right. So you could trade the SDSs from the long side or the short side. Same thing with the spiders. But if somebody wants to just do this outright, let's just say, oh, I think the market's going to hell. You just buy the SDSs instead of shorting the S. Some people can't short, right? So they go and they buy the one. Some firms give 3 times leverage. Some firms give 1 time leverage. So if you're trading the market, and let's say, you know, you're an investor and you're loaded up, but you need some downside protection, you just buy these things just in case, you know, for the market. But I use it for intraday and for longer term. Like when the Dow, I don't know if you heard me like a week ago, we were 1,900 points from that moving average on the daily. I said, look to buy the S Dows.